Brian Shannon here from AlphaTrends.net. Today is Friday, the 21st of October, 2011, and the markets are obviously closed for the week. So let's take a look at the table and see how they did here. You can see that for the week, the S&P 500 was up 1.1%, while the Nasdaq lost 1.5%. And interestingly, the most hated group, the financials, was rather up 4.2%, and now up more than 11% month to date. So the Russell and the Nasdaq slipped a little bit in relation to the other markets, but still real solid month for equities so far. And the U.S. dollar started getting hit a little bit, along with gold some more. But let's take a look at it, because we did get past some important levels, and we've been talking about whether this market would be able to make a higher low and hold above that the prior. Important level, that is these lows near the 119 level. That was really at the beginning of the week level that we were looking at as a key level to be a higher low from which this market might be able to launch higher from, which it did today. So we now have a higher high and a higher low. Before, we had this rally, but we didn't have a pullback. And really, the good news, I guess, is that the question we were looking at last week was, is this market going to correct price wise or time wise? And it really turned out to be much more of a time correction, as it held on to the bulk of these gains that we had seen after that false breakdown, or the breakdown that failed to stick, I guess you could call it. And we did find support along the rising 10-day moving average. And at 10, we've got the 20 coming up through the 50 as well, and they're advancing. Either the weekly time frame, still not perfect, but what we're looking at here is this key level that was breached at 123.50 or 52, I think. And now it looks like this S&P 500 should zone in towards 126. That becomes the next potential level of resistance, and really what is going to be the magnetic field that draws the market higher up towards 125.5 to 126.5. This prior band of support, which should likely become resistance. It doesn't mean it will become resistance, but that's the logical place to look for the market to rally to, and to maybe encounter some resistance. But again, we now have a higher low. This is going to be a 119 is going to be a very important level for months to come. I think that now that we have the higher high, and today the way we did that higher high was with a gap higher, of course, and the market continued to rally from there. But then we saw a midday pullback, which got us through the volume weighted average price and brought us back in underneath that range. So that 150 through 123.50, let's just call it, was really kind of the breakout level, and this gave reason to believe that it wouldn't hold. Well, when it got back above VWAP, and then it had this little shakeout here, real strong close with, obviously that's not untypical for the end of the day, to have atypical maybe rather than untypical, but either way, it's not unusual for, of course, the bigger volume to come in at the end of any day in these markets. And the good news is it came in and pushed this market on a closing basis above those highs. This is, basically new highs for, since the August sell-off, and the subsequent breakdown through that level, and rally back up. So it looks again like the market's headed for about 125.5 to 126.5. The key level is 119, but if we're looking for 125, let's just call it let's say 126 is our target. That's $2 away. So would we want to risk basically $4 for $2 of upside? Of course not. But that just tells us where the market has the potential to go. I think that we have to look at today's afternoon low, near about this 122.60, and say that if the market was to break below that, then it wouldn't make sense maybe to be back involved in this market on the long side. That's where you'd want to kind of expect it to come back down and settle in a little bit further. But this week we saw this little trend line hold, and that was That was a good thing. So it seems as though it's set up for some further upside. There's, of course, a lot of headline risk in the market. There has been, and this market has been climbing that wall of worry, basically. So I think you have to, intermediate term, give the benefit of the doubt to the buyers here. It did correct through time, and that's a bullish thing. You'd rather see a correction through time than price because it says there's still bidders in the market who are interested in purchasing, but they don't want to chase it higher. They become forced to chase it higher once the market does rally again, as it has. The Nasdaq again underperformed a little bit and was actually down this week, down 1.5%. But it's been the stronger market recently, anyways, and it held a key level in here on a closing basis, which was that 56.5 level. I think yesterday it closed at $56.56, if I remember correctly. But we're seeing in here also the higher low and what's looking like a bullish flag, and it's not unlikely that before the end of the year that we could see new highs in the Nasdaq, and that's only up at basically $60 a share, just under $60, and that would put us at a decade plus highs when we back it out to the monthly chart. So the key level in the Nasdaq is still, I think next week we probably want to see it continue to close above 56.50, but this level right in here, 55, if this was to break 55.70, then there could be a deeper pullback. The Nasdaq isn't still as bullish looking, especially on a shorter term time frame, as the S&P 500, but this market had been outperforming and probably needs to clear 57.80 before you could think. What would be nice to see would be a rally up towards these highs, then a pullback that tests this 57.80, and then a continuation higher. I think that could set it up for a test of the high for the year. So our first area that we want to see hold, this market came down and basically closed this gap here at about 56.80. We want to see 56.80 to 56.50 hold. That's really going to be the key level for us, I think, to look at next week is 56.50 to 56.80 should be our band of support. If we lose that, then you want to be a little bit more defensive. The semiconductors, they were up 2.75% today, and for the week these guys were just barely higher. But again, this market is the semiconductors have been holding on to their 20 and 50-day moving average as well, just below this level of what had been prior resistance, and possibly headed up towards 32 or so. The semiconductors really seem more neutral on the daily chart, but you have to be impressed with this action today, the way it was able to get back above, it gapped above that 5-day moving average, rallied hard, pulled back, and now it looks poised for some continuation maybe into next week, and the key level in here is about 29.5. The financials did hold above that $13 level, so we had been looking at $12.20 to $13 a share as being the key levels for this week, and 13 was taken out, and we had the same thing in here. It was taken out. We had a little shakeout below that level, but the buyers came back in at the end of the day. And again, for the week, these things were up 4.2%, and for the month, they were stronger than any other ETFs that I track here, but still a horrible year. I tweeted that actually the Nasdaq was in first, the financials, then the semiconductors, and then the I should just pull the chart up. I don't have quick access to it. But I tweeted that on today from the March 2009 lows. The financials were, in other words, just behind the Nasdaq and ahead of the S&P 500, which most people wouldn't have expected on a percentage basis because their chart looks the worst, but they had a much bigger rally early on. Anyways, back to the analysis here. I think we want to see a look at the market hold 1290. first, and 1290 to 13. We can give it that benefit of the doubt down to today's lows, and it looks like these financials should at least continue up towards 1350. And I guess we didn't cover the Russell 2000 for some reason, but the Russell is still consolidating here and looking much healthier. Again, we have headline risk, and I'll say that everyone's got an opinion of the news. Just listen to price action, and it's been more constructive recently. We had the possibility, as I was mentioning earlier in the week, from a failed move would come a fast move. We've seen a lot of those, and it's just a possibility. Back to the Russell again, the key level of support did hold at about that $68 level, and that's we've got now a test of that again. Here we dip slightly below 68, but same thing here that we saw in the semiconductors was a gap higher, it rallied up, pulled back, and now it's kind of poking away at this resistance at about $71.30. So I think if we get above 71.30ish and hold above 70, it looks like the Russell, we're basically right on those highs. That maybe we'll see a new recovery high for the Russell 2000 up towards the August highs near about 73.5 to 74. That'll do it. Hope everyone has a good weekend, and talk to you next week. Thanks.